app revenue is on its way to tripling to $15 billion this year. That is according to Gartner Research. App adoption exploded after Apple opened its App Store back in 2008 with just 500 applications. Now there are hundreds of thousands. One venture firm was ahead of the curve. Kleiner Perkins launched its iFund, which invests in iOS developers, even before the App Store opened. That fund is led by partner Matt Murphy. Matt, welcome back to Bloomberg West. Great to have you here again on the show. So I think we have to talk about the big news, which is Steve Jobs stepping down from Apple. There are so many companies, you know, in your realm that depend on Apple. How have those entrepreneurs and developers reacted to this change?
Well, there's been a mass outpouring of thanks to Steve for everything he helped create. I mean, really, there are so many people who are passionate about mobile for 10 years, and until 3-4 years ago, it was a pretty painful place to try and build an application or for a consumer to do anything. There were only about 10% of people who'd ever used a mobile web browser, 5% of people who'd ever used an application, and 0% of people who had a true smartphone. And it was Steve and Apple who kind of opened up this whole world today that we're all experiencing that's really changed the way we're spending time.
Now, some would say it is still difficult to build for the Apple platform. We spoke with Paul Graham of Y Combinator, who said some of his entrepreneurs, you know, because of the closed system that Apple has, it is difficult to kind of cross that line. Do you think that that's going to change without Steve at the helm, or is that something that's always going to exist at Apple?
Well, first of all, I'd refute the comment. I mean, I think how can you say it's a challenging platform to develop to if there are over 500,000 developers and it's the most vibrant application community out there right now? I think the knock they get is on the approval time to get apps approved, but now I think it's high 90% are approved in 1 week, and certainly developers haven't shown any kind of loss in momentum relative to how much time they're spending on iOS. It's a terrific platform to develop to, and it's a terrific platform to use. Would I like the approval time to be a day instead of a week or an hour? Sure, but you know, that's come a long way.
Now, your job is to look into the future. I mean, what kind of changes are you anticipating at Apple under Tim Cook?
Yeah. The people who've been there, like Greg Joswiak, Scott Forstall, Phil Schiller, Eddie Q, they've been there for decades, or at least a decade. So the bench strength and the team they have there is phenomenal. And my sense is they're plenty capable to take this forward with Tim. And there's probably a really interesting product pipeline that's baked for the next few years. So I don't think we're going to see any near-term changes. I think what they're doing now is working pretty well, and just doing more of that will be a good thing.
Any chance Apple could become more acquisitive? They haven't been very acquisitive in the past, but might they be interested in buying some of your portfolio companies? George Zachary, an early Twitter investor, came on here a few weeks ago, suggested that Apple might want to buy Twitter.
Yeah, I think the dilemma for them is they basically want to provide the platform for all these developers to succeed. So I think they want that ecosystem to be as robust and terrific as possible. And if they start buying a lot of applications, then does it put them, more in contention with that very developer community that they're trying to foster? So I think they're very focused on making sure that acquisitions they make help make the platform stronger. So if you think about them buying Quattro for iAd, that was to help developers make a lot more money. So I don't see them getting into a bunch of vertical applications, but I think if something looks like it could help make other developers more money, help with retention, engagement, those kind of things, I think you'll see them do that.
We're back with Matt Murphy, who runs Kleiner Perkins iFund. The iFund invests in developers who make apps for iOS. Matt, let's talk a little bit about some of your portfolio companies. Obviously, you're in some big ones. Zynga filed to go public earlier this year. It still hasn't listed. It filed before some of the market volatility we've been seeing. Is there a delay there? What's going on?
Well, they're in their quiet period, so I probably can't say a lot about that. But the main thing I'd refer people to is just look at their S1 to get a sense of their business and what they've been able to accomplish in a short period of time. It's a pretty compelling American story of value creation, and again, offering consumers a new set of applications and services and a new way to monetize that wasn't around 4 years ago.
How about a company like Groupon? They are in a quiet period as well, but they have been anything but quiet. You know, there was that memo from Andrew Mason that he sent to his employees. There have been interactions with some of the PR representatives. As an investor, is what you've seen from Groupon, is that at all concerning to you?
No, I think, again, just look at their S1 and what it states in there. I think there are a lot of kind of rumors and things that go around when a company's about to go public, especially high-profile ones. And I think the main thing to focus on is the fundamentals of their business and what the numbers and the business strategy and the management team says, and that all seems pretty good to us as investors.
Bill Gurley, another venture capitalist at Benchmark, had a quite insightful post about companies going public and suggested that there could be severe consequences to companies that delay their IPOs. Basically, he's saying if you commit to it, you got to go out. Would you echo that? Do you think that if these companies don't get a move on, that there could be trouble down the line?
I don't think so. I mean, it depends on why you're going public. Sometimes companies have to go public for fundraising purposes or whatever to fuel the business. But I think every company should be allowed to decide based on market conditions when is the right time for them. I don't think there's any hex on a company because you said you were going to go public and you decided the time wasn't right for whatever set of reasons. So I'm not too worried about that. I think if the fundamentals are strong, you can go public whenever you want. And whether you delay that by 3, 6 months, or a year based on what things going on with the company, that's totally fine.
It's obviously a balance. I mean, how do you guys advise companies about when to go public versus staying private?
I think it's really up to the management team and the goals that they're trying to achieve. So sometimes you go public because you want to have a big balance sheet, a high market cap, and it makes it easier to buy companies. Sometimes you need the capital to fuel expansion, and sometimes for consumer-facing companies, it's a big branding and marketing event. So it just depends on why you're going public. But go public for the right reasons, I would say, not go public for ego or to kind of be able to look every day at your stock price. Things like that can be a real distraction. Do it because it's the right thing to help accelerate the business.
Back to the iPhone. Now that we've seen kind of some of these first-generation social computing companies evolve, like the Groupons and Zyngas, Facebook,
right.
Twitter, what kinds of things are you looking to invest in now?
Yeah, mobile's evolved really quickly, as we all know. 4 years ago, the new world of mobile didn't exist. It was really kind of the email mobile experience. And then the last 3, 4 years, it's been more about single user utility, where I'm looking at a utility like a weather app or a finance app or maybe a game. And I think we're emerging to a point of mobile where people are getting more and more comfortable doing things on their devices and interacting socially. So earlier this year, you saw kind of the first example of that in a game called Words with Friends. Where people are now making it a social game. But beyond games, I think we're seeing more and more of this community of people on mobile with location information being able to contribute into the community. So there's a driving app called Waze, for example, where there's a community of contributors saying exactly what the traffic conditions are 5 miles ahead of you, and you can ping them in real time and find out what's going on. Or an application like Shopkick in shopping, where you can tell other fellow consumers about a special offer or a deal. Or, I mean, I can go on, but Groupon now, where you're creating an immediate kind of local spot market for goods and services. Some may be perishable. So I think these are inherently mobile use cases where supply and demand side can publish into a demand for something or a need for something and create these brand new marketplaces or this community of information. So I think the whole contribution and publishing model on mobile is really going to take off right now, along with social, and we're going to see this, what's called the crowdsourcing dynamic really take off. So that's kind of a big pot of things that are mixing right now, but I think we're going to see that as a next breakout leg for a lot of companies.
Oh, okay, Matt Murphy of Kleiner Perkins looking into the future. Thanks again for joining us.